Don't be intimidated by your closing disclosure. I'm going to show you a foolproof tool that you can use to analyze your closing disclosure like a pro. So here's the tool we're going to be using. There is a link in the description of this video directly to this site, or you can just Google CFPB Closing Disclosure Explainer and it'll bring you to this page. So this is what your closing disclosure will look like. Standard mortgage document, no matter what lender you use, your closing disclosure is going to look this same format. So this tool is really cool because it shows you exactly what to look at on each page and it highlights each box for you. So here it just starts making sure that your name is correct on this document. That is extremely important because when you go to close, you need to make sure the documents have your name correctly listed on there. This will show you what your loan term is and some different information about your loan. So here you'll see it's a 30-year fixed. This is a purchase loan. If it's refinance, it'll list refinance, whether it's a fixed rate or adjustable rate, which is super important to know, what type of loan you have, your loan number, which is also important to know later for servicing. Now at this point, you've already received loan estimates, and this is your closing disclosure, which you receive after loan estimates. So in this next box, they want to make sure that numbers match unless you wanted this changed. So just make sure this is the correct loan amount that you want, and you'll check that based on the sales price listed here. Make sure that's accurate, subtracting your down payment to equal this amount. If you wanted a different loan amount, just get with your loan officer. They can make the updates as needed. Check your interest rate. Make sure this is the interest rate you agreed upon with your loan officer. Does your loan have a prepayment penalty? That's important to know. This box will tell you. Does your loan have a balloon payment? That is definitely important to know because at the end of your loan, there could be a lump sum payment due. Now this next box will just tell you what your total monthly payment is, and you'll want to see if this has changed from your loan estimate. Sometimes these figures will change depending on anything else that's been updated. So if you have the same interest rate, you're in the same loan amount, your principal and interest should be the same. But what is likely to change is your escrows if they got updated during underwriting. So just take a compare and see what changed from your loan estimate to your closing disclosure. Make sure you're comfortable with this monthly payment. And then this is telling you your estimated escrow, so what your property taxes and your homeowner's insurance are going to cost you. And it lets you know that these are both in escrow. And then if there's other dues associated with the property, so if you have to pay HOA dues, this will be listed here. But as you can see, they're not in escrow. So that's something you have to take care of outside of your monthly mortgage payment. Now, closing costs at this point in the process, these should be pretty nailed down. They're going to be more accurate than they were on your loan estimate. So these will get broken down on page 2, and then your cash to close should be updated as well based on your closing costs and your down payment. So make sure you're comfortable with this number because this is the number that they're expecting you to bring to close. Moving on to page 2, section A should be pretty straightforward. This is what your lender is charging you for the interest rate and any other fees. So you want to make sure that this is not drastically different from your loan estimate. Unless something has changed with your interest rate or the type of loan, this should be pretty similar to what your loan estimate had. So definitely compare that nothing drastic has changed. Services you did not shop for. So this is just going to be verified fees that you have either already paid for or are paying at closing. In this case, some of these have been paid before closing. If that's the case, it'll be put in the before closing column. And the appraisal fee looks like someone else paid for that. But if you already paid this up front, it would be listed as paid before closing. Services you did shop for, these should now be more accurate than they were on your loan estimate. Initially, they send out a loan estimate with just estimated title figures. Once you've gone through underwriting and the underwriter has verified all your title fees, these should all be updated to reflect accurately. Now, these fees should be more honed in now, especially if you already have a closing date scheduled or if this is a final closing disclosure. These are taxes and government fees here. That's going to show you what the county is collecting for. Then prepaids. This should be pretty accurate now. If you know what your closing date is, it should reflect accurate figures. Initial escrow payments at closing. This should also be accurate because they know your closing date. So again, these should be more accurate than what your loan estimate had. All of these other fees down here should be fees that are taken care of outside of the loan. So this is not something that's lender specific, but the lender has gone to title and balanced these fees that they already are aware of with the transaction. So it'll have real estate commission, it'll have any warranty fees, anything that's outside of the lender fees that are involved with the transaction, they should be listed here. So total closing costs will be listed down here, and if you have a lender credit, that'll get deducted from that total closing cost figure. Now, calculating cash to close box, this is on page 3 now. This is going to be similar to the calculating cash to close box on page 2 of the loan estimate, but this is kind of cool because it compares what you had on your loan estimate to what you have now, and it lets you know what has changed. So that's super important to look at to make sure you're not missing anything important or something has drastically changed that is incorrect. So if any seller credits or anything was added during the process, you'll see that if it wasn't disclosed up front, it's added later. Anything paid before closing gets deducted here because it was already paid for. And then your cash to close should show you a more accurate figure. This box down here, the summaries of the transaction, that is going to basically break down everything that's happening on your side of the transaction and everything that's happening on the seller side. So you'll see here seller credits, if there's any adjustments made to like HOA dues partially covered by the seller or like taxes partially covered by the seller, you'll see those adjustments made on this side. And then at the bottom here, it'll have the cash to close figure calculated here again. Same with the seller, because they'll get a copy of this as well so they can see what their proceeds are and then commissions deducted from that as well. So this is a good way to look at the overall picture, but not every item in here is going to be directly related to the lender and your loan. It's going to include anything that happened within the transaction but outside of the lender's transaction. Now we're going to move on to page 4 and go through all of these items. So the assumption box, this just tells you if your loan is allowed to be assumed by somebody else down the line. Demand features, this just tells you if your lender is allowed to have a feature that allows them to demand immediate repayment of the loan at any time. So that's important to know if there's a stipulation that they can require full payment. This will tell you how much late fees they'll charge for late payment and also your grace period. And then negative amortization, this will tell you if your loan has a negative amortization feature. That would be something more like a reverse loan, which not typical, especially for younger people, but this will tell you if you have that feature. Partial payments, this is also important. It'll tell you if they are allowed to accept, or they're allowed to accept partial payments for the loan and apply them. So it kind of tells you if you're able to make like bi-weekly payments and if they're applied differently. So that's something to keep in mind. Security interest, this just lets you know if they're able to foreclose if you don't make payments. Escrow account, this is going to give you information about your escrow account. It essentially just tells you the money that you already put into the escrow account, and then it lets you know what you're going to be paying monthly. So it just kind of gives you a full picture of where your escrow account stands at closing, and then what will the payments look like moving forward. Now down here, sometimes you can opt to waive escrows. A lot of times you have to put more money down on the loan. And usually it has to be a conventional loan because government doesn't like to allow escrow waivers. But if you did waive escrows, it'll tell you if there was a fee to do so. This is just a disclosure down here to let you know that your escrow payments may change in the future, and that is because your property taxes may go up or your homeowner's insurance premium may go up. So they reserve the right to update those payments because they need to make sure that they have enough in the account to pay those bills and due when they're full. So expect things to be fluid if those updates need to be made. All right, page 5. This is a cool little box because it tells you kind of the total payments you'll make over the life of the loan, including interest and the cost. So this total payments box, the total of payments tells you the total amount of money you will pay over the life of your loan if you make all of the payments as scheduled. This is what will come out of your pocket. Finance charge tells you the total amount of interest and loan fees you will pay over the life of your loan if you make all of the payments. So it's all of the interest and fees that you've paid. Amount finance is the net amount of the money that you're borrowing from the lender minus most of the upfront fees that the lender is charging you. So that's kind of like your base loan amount. Annual percentage rate is basically telling you what your interest rate is, including all of your closing costs associated with doing the loan. And then your total interest percentage is basically the amount of interest you'll pay over the life of the loan. And that helps you compare between different loan options. You can kind of see the total interest you're going to be paying in comparison to the loan amount. This little appraisal disclosure up here just tells you you are supposed to receive a copy of the appraisal within 3 days before closing or before 3 days before closing. And then there's some other disclosures here that you can read through based on your loan. And then here it's just the contact information for everybody involved with the process. So you should have all of your lender's information here, your loan officer's information, their license number, the real estate agent on the buyer and seller side, and you'll have all of their license information and contact information should you ever need to reach out to them for anything, as well as your settlement agent, so the title company and the person who handles your closing. So these are all important contacts to keep on hand. Keep a copy of this. Make sure in case you need to reach out to them for anything you need regarding this transaction, you have their contact info. Now at the bottom here is just confirmation of receipt. This looks to be an initial closing disclosure, and let me tell you the compliance rules for that. So lenders are required to give you an initial closing disclosure at least 3 days before closing. You're not allowed to close within that 3-day window. You have to wait that period. And that may change if it's an investment property or not, but for primary residence, there is a waiting period from the time you sign the initial closing disclosure to when you can close. So it's important that your lender gets that initial closing disclosure to you as quickly as possible so that you don't run into any delays with closing if that comes out too late. So when you sign this, again, your initial closing disclosure is going to tell you by signing, you're only confirming that you've received this form. You do not have to accept this loan because you have signed or received this form. So your initial closing disclosure is not binding you to the loan. You will receive a final closing disclosure version, should be sent to you before closing so you can review it, but that's the one you'll be signing at closing, and that one will be binding you to the loan along with all of the other documents that you sign with a notary. So that's the end of the document. Definitely utilize this tool so you can go through line by line. If there's any definitions you're unsure of, this will tell you what things mean, give you definitions. It'll give you helpful links to things that you need to learn more about. So definitely a good tool to utilize along with your loan officer. Make sure you reach out to them and have them explain anything that you need clarification on as well. If you want to learn more about the home buying process, you can download my free Home Buying 101 workbook with the link in the description. And if you like this video, please like, subscribe, and ring that bell.